How effective is the Bollinger Bands trading strategy? Does it even make you money? I have tested hundreds of different trading strategies before I found which ones work the best, and I'm going to share my results with you. Welcome to this episode of Ahead of the Trade. Today we are going to be continuing our Bollinger Bands series by exploring the Bollinger Bands as a momentum-style technical indicator. We're going to explain the Bollinger Squeeze trading strategy, which is an alternate way of using the Bollinger Bands from what we presented in part 1 of this series. We will also explain how to effectively set up and use our custom Bollinger Squeeze strategy indicator. It is available for you to download for use on TradingView by following the link that I have included in the description. Later in the video, we are going to backtest our Bollinger Squeeze strategy 100 times on real chart data to show you exactly how effective it can be when implemented in a trading scenario and what results you might be able to achieve from trading it yourself. If you are unfamiliar with the Bollinger Bands technical indicator, I suggest you pause this video and first watch part 1 of this series. I've put a link in the description. As explained in part 1, the Bollinger Bands are most commonly used as a mean reversion style technical indicator to alert us when price is entering either overbought or oversold areas on the chart relative to recent price action. However, this is not the only way that the Bollinger Bands can be implemented within a trading strategy. The Bollinger Squeeze trading strategy uses the Bollinger Bands in a very different way. It is a momentum-style strategy designed to capitalize on powerful breakout moves and capture price trends. The difference between this strategy and the strategy that was presented in my previous video is that the Bollinger Squeeze is a momentum-based trading strategy. It is best suited to trading markets that are trending in a defined direction. Conversely, in part 1 of this series, the strategy that was presented is a mean reversion style strategy, which is most effective when price is trading within a range. If you would like to learn more about the difference between ranges and trends, refer to my stochastic technical indicator video. By definition, all price trends must begin with a breakout from a range. There are many different ways to identify and quantify price ranges. Conveniently, the Bollinger Bands indicator has a very clear range already established for us to use. The range between the upper and lower bands. Breakouts from the Bollinger Bands often lead to some extended trends, which can be excellent trading opportunities. When combined with a well-refined set of entry and exit criteria, and with established risk management procedures, we can use these breakouts to form the basis of an extremely effective trading strategy. The Bollinger Bands settings that we have found to be most effective for this particular strategy, after extensive back testing, are 20 for the simple moving average and 2 for the number of standard deviations between the middle line and the upper and lower bands. Some other settings that you may find useful are 50 for the SMA and 1 for the number of standard deviations. These settings are generally going to provide less frequent signals than what we have recommended. You may find these settings to be more effective for your own style of trading. I encourage you to experiment by performing some back testing of your own, as well as trading in a simulated account to find which settings work best for you. In addition, this strategy also takes into account the Bollinger Bands width indicator. As the name suggests, this indicator tracks the actual width of the Bollinger Bands in real time. Due to how the Bollinger Bands function, they will contract and expand in conjunction with the volatility of price. When observing a breakout event, we look for expanding Bollinger Bands width for confirmation. If we were to just buy at any and every breakout from the Bollinger Bands range, we would take some really great trades but likely end up losing money over an extended period of time. For this reason, we need to implement some strict entry criteria to ensure that we are only trading when we have first observed a series of predefined conditions. This will ensure we keep the odds of profiting from this strategy in our favor and will help us enter only when we are presented with the best breakout opportunities. For our Bollinger Squeeze trading strategy, the entry criteria are 1. A candle breaks out and closes outside the Bollinger Bands range. 2. The 200-period simple moving average is trending in the same direction as the breakout. 3. The Bollinger Bands width is expanding. To have a complete trading strategy, we must not only define our conditions for entry, but also our trade management plan and how we will go about exiting the position, either for profit or for a loss. There are many different ways to define at what point to take profits when trading this particular strategy. After many long hours of backtesting, the most manageable and consistently reliable method that we have identified for taking profits from the Bollinger Squeeze strategy is to sell our position when a candle closes on the other side of the middle line of the Bollinger Bands. We must also ensure that we do not let the position move against us by an unreasonable amount. To keep our losses contained, we are going to set a stop loss at the lowest point of the candle prior to the candle from which our buy signal has been given. This means if price moves lower than the lowest point of the candle before our entry, we will close our position immediately. As an added feature, our Bollinger Squeeze indicator will automatically plot the correct stop loss price on your chart. Let's recap both our entry and exit conditions, and then we will go through an example together. To enter a trade, we must see 1. A candle close outside of the Bollinger Bands range. 2. The 200-period simple moving average is trending in the same direction as the breakout. 3. The Bollinger Band's width is expanding. Our criteria to exit a position are 1. A candle closes on the other side of the middle line of the Bollinger Bands. Or 2. Our stop loss is triggered. As you can see, our Bollinger Squeeze strategy indicator will display all valid trading signals. It will tell us whether to go long or to go short. It will also let us know when our exit conditions have been met. You can enable signal alerts when using this indicator in the form of a pop-up, a SMS, or an email to ensure that you don't miss any entry or exit signals. Now that we have confirmed our entry and exit conditions, let's go through an example Bollinger Squeeze trade. Here is the daily time frame chart of the stock Tesla. Ticker code TSLA on the Nasdaq exchange. As you can see, we have received an entry signal here because this candle has closed above the top of the Bollinger Bands range. The middle line of our Bollinger Squeeze indicator is green, which means the 200-period SMA is pointing higher. We can also see that the Bollinger Band's width is expanding at the time that our buy signal is given. Now that we have confirmed all of our entry criteria, we would take this trade and buy Tesla at the opening price of the next candle for $492 per share. Our stop loss, as per our rules, is set at the lowest point of the previous candle. In this case, our stop loss would be here at $433.01. If price was to go below $433.01, we would exit our trade immediately for a 12% loss of $58.99 per share. As is the case in this example scenario, our stop loss is not triggered and we ended up capturing a quite significant breakout. Our signal to exit this position does not come until a candle closes below the middle line of the Bollinger Bands, all the way up here at $793.53. This is an excellent result. We have made a profit of $301.53 per share, which is a 61% gain. The risk-to-reward ratio for this particular trade is a little over 5-to-1. This means that our reward was over 5 times greater than the amount that we were risking. Although we cannot expect to make such a significant profit in every trade that we take with this strategy, this is an excellent example of the kind of breakout move we are aiming to capture. An added feature of this indicator is that the darkness of the background color indicates the intensity of the current trend. Extreme moves in price will make the background of the indicator either green or red, depending on the direction of the trend. The indicator's color scheme can be modified to suit your own preferences. Now that we know exactly when to enter and exit our positions, and we have covered how we are going to manage risk by using a stop loss, we are ready to begin the backtesting process. For the purposes of this video, I am going to backtest this strategy 100 times using signals from the 15-minute time frame chart of the stock Nikola Corporation, ticker code NKLA, traded on the Nasdaq exchange. I am going to use this Excel spreadsheet to track the outcome of each trade. We are going to assume I am trading with a starting balance of $10,000 and risking 2% of my account balance on each trade. This means that my position size will equal 2% of my account balance divided by my entry price minus my stop loss price. You'll be able to see my profit and loss updating throughout the backtest, and you can watch the percentage win rate as it develops. I will now begin the backtest. As we discovered in the first part of this series, the most important factor in whether a trading strategy will be profitable or not over a period of time is risk management. Ensuring that we cut losses quickly and let winning positions grow is what will either make or break any trading strategy. The ability to effectively cut losing positions at a predetermined price will significantly improve your trading results. For this reason, I recommend always trading with a stop loss, regardless of your trading experience or skill level. The biggest mistake that beginner traders often make is to trade without a clearly defined stop loss. As you will see throughout the course of this back test, my stop loss ensures that my losing trades are capped to a far smaller size than the majority of my winning trades. When this is the case, it allows me to trade with a significantly lower win rate and still be very profitable over 100 closed trades. The reason that the stop loss in this strategy is significantly tighter than in the strategy presented in part 1 of this series is due to the characteristics of breakout trades. When trading breakouts, we expect to see a quick and clean move away from our entry price. If that is not the case and we find ourselves in a fake breakout scenario, we want to be out of our position as quickly as possible with the minimum amount of risk. The rules that we have put in place for this strategy all are relevant to managing our risk. However, rules are only effective if they are followed. Each rule has been implemented for a specific reason, so we must ensure that we never make exceptions, as this will open the door to a poor set of trading habits being developed. More often than not, when we deviate from our rules, we will lose money, and it will negatively affect our mental state, hindering our ability to perform in subsequent trades. It can create a snowballing effect that is detrimental to our longer-term results. Conversely, when we follow our rules and have success by means of profiting from our trading strategy, we will feel good about our decisions, and it will become even easier to continue to follow the rules into future trades. You may wish to experiment with additional ways of taking profits when trading the Bollinger Squeeze. If you consider yourself to be more of an intermediate or experienced level trader, you may wish to modify the exit conditions to this strategy. I suggest you experiment with using a trailing stop loss to lock in profits as the position moves in your favor. I have personally had success using this method of trade management. The use of a trailing stop loss with this strategy will generally increase your win rate. However, it involves more laborious management of the position. I strongly recommend that you experiment with adding additional entry conditions to further filter for only the best opportunity setups. I suggest beginning with implementing the MACD technical indicator, explained in a previous video, to help gauge the current momentum trend when presented with a signal to enter a position. As with any trading strategy, it would be wise to avoid taking entry signals when price is approaching an important support or resistance level. Support and resistance levels can be identified on the chart in advance, and they will be explained further in another video. It is important that I emphasize this point. It is essential to ensure you are not buying directly in front of resistance or selling directly in front of support. This practice will make a substantial difference to your trading results. For the purposes of this back test, I have had to test over about 10 months worth of 15-minute chart data to encounter 100 valid trade signals. For this video, I am trading both long and short positions. This means that I will either buy or sell to enter my position based on the signal given by the Bollinger Squeeze indicator. Breakout trades are usually less common than mean reversion trade setups, but they generally offer substantially greater risk-to-reward opportunities. To encounter valid trade signals with greater frequency, you can either monitor multiple stocks simultaneously, trade on a lower time frame chart, or both. As a general rule, breakouts on lower time frame charts, such as the 1-minute or 5-minute charts, tend to result more often in false breakouts than they do on higher timeframes. The back test is now complete, and we can analyze our results. As you can see, my win rate after 100 trades has finished at 49%. Due to my profit factor of 2.19, I have made 205% profit on my initial balance, and my account balance is now at $30,563.41. This is a significantly greater profit than was achieved by trading the mean reversion strategy in part 1 of this series. If we were to have applied a simple buy and hold strategy to the same stock over the exact same period of time, my profit would have been 88%. The reason that my profits were substantially better than the buy and hold strategy is because the Bollinger Squeeze strategy has the flexibility to trade both long and short. We are able to make a profit regardless of whether price is trending higher or lower during the given time period. Another advantage to the Bollinger Squeeze strategy when compared to a buy and hold is the difference in the time exposure risk. When holding a position for any period of time, We are exposed to the risks of market volatility, as well as unexpected events and circumstances, which could significantly impact the value of our position. By only entering trades when we are experiencing breakout conditions, as per the Bollinger Squeeze strategy, we are avoiding market exposure when price is stagnant and not trending in any defined direction. This reduces the total amount of time that we are in the market and therefore drastically reduces our time exposure risk. By ensuring that we are only entering positions when price breaks out from a range and by setting a tight stop loss to make sure that our losing trades are significantly smaller than our winners, we are able to manage our risk effectively and we put ourselves in the best position to make a profit from trading this strategy. I'm sure you now have a far greater understanding of the Bollinger Squeeze trading strategy and are ready to try it out in your own backtesting and trading. If you are interested in trying my Bollinger Squeeze trading strategy indicator for yourself, as featured in this video, or if you would like to use my Excel backtesting journal, follow the links in the description. If you have found this video to be helpful, consider giving it a thumbs up and subscribing, as it will help the video get recommended to others by the YouTube algorithms. If you would like to further support the channel and have a sneak peek at our behind-the-scenes notes, as well as a few other perks, we would greatly appreciate you becoming a Patreon supporter. For more information, see the video description. Make sure that you let us know in the comments what strategy you want us to test next. See you next time on Ahead of the Trade.